glad that we're having this interaction and this engagement. The fact remains that the myriad of challenges that we have in the country warrants all of us putting our heads together and our hands together and using our experiences to address those issues. Let me speak specifically to some of the issues. The issue of abandoned estates. By the way, we've done surveys as part of our assets register, and we're working and collaborating with some stakeholders to create an inventory of abandoned properties. It's not only properties that estate developers build, but even government abandoned properties as well. If you go to Lagos, at Central Business District in Lagos, you see a lot of those old secretariat buildings that have been abandoned. And as you move into different districts, you see a lot of residential real estate properties that have been abandoned. We're looking at that. That would be a whole different project that we're looking at. And I will definitely take your recommendation into consideration in terms of if there are opportunities to renegotiate and buy out some of those developers, if it makes commercial sense. But what I also notice that seems to be a common strand across all the contributions. Let me just address some fundamental issues. One is we're an investment management company of the federal government of Nigeria. What that means is that we have shareholders. And who are those shareholders? It's the federal government of Nigeria. In other words, Nigerians. And we are expected to deliver returns to the shareholders, who are Nigerians, in every investment that we make, albeit moderated. The returns we get may not necessarily be the same that private companies will deliver, because we also have a developmental dimension to it. But all of the investments we make must have some element of return on investment. That is the only way that we can be sustainable. So if it is a non-for-profit, if it is a social, we would stay away from that and let other government agencies that are set up to do that do it, especially the ministries and some other departments and agencies will handle that. But if we're doing anything, it has to have some element of commercial nature. It also has to have some element of investment where there is expected return. That is the first point I'd like to make. The second point I'd like to make, for point of clarification, the MRIF is not to go and build houses. We do not intend to build any houses because we believe that in the ecosystem there are developers who have already developed years and years of expertise in building houses. We intend to work with them. And that is why in the case of MRIF, there is what's called the off-take guarantee for developers. Because today many developers struggle to raise financing from financial institutions, whether they are commercial banks or development financial institutions such as Shelter Afrique. Any of those institutions would expect the developer to give them an off-take guarantee before they can extend credit facilities to them. And that is why we've built in that element in the structure, that if the developer qualifies and meets the criteria, they will be given an off-take guarantee that they will intend use to get credit. We don't intend to compete with them. Neither do we intend to be a mortgage bank, because there are existing mortgage banks that are licensed by the CBN. They will continue to do their job. In fact, we would help them by providing them with liquidity to help them write mortgages, because today most of them are at the risk of shutting down because they do not have liquidity to write more mortgages. The purpose of this program is to mobilize liquidity from both public sector and private sector combined at scale, so that we can extend it to them, which is why we call them the eligible financial institutions, both primary mortgage bank as well as other banks, to give them credit to do that. We are not taking over what Federal Housing Authority is meant to do. They will continue to do their work. If they need any financing for development, so long as it is commercial, and they can show us how they will pay back the money, they will get the line of credit, they will get the off-take guarantee. We are not meant to replace what Federal Mortgage Bank is meant to do. In fact, we are shareholders in Federal Mortgage Bank. It is in our interest for Federal Mortgage Bank to be successful. If they qualify, they can also have credit, they can access the funds like any other mortgage bank will access the funds. But it has to be commercial, and we need to have a line of sight as to how the money will be paid back, because it's investors' money. It's not social in nature. So I just want to be very clear that we're not duplicating or replicating anything that anybody else is doing. The other point I'd like to make to this distinguished committee is that we do not intend to reinvent the wheel in any way. If there are people in the ecosystem that are good at what they do, we will work with them. We're already out there engaging developers who we believe have the credibility to see the product they have in the marketplace and say, what support do you need? How can we help you? We will help them in that case. We know our niche. Our niche is to mobilize capital at scale, leveraging on federal government's might, resources, and private sector, create a structure that allows us to mobilize capital and put into these sectors. The other point I'd like to make is that we are very clear as to what our customer base is. Like every business, you must know your customer. We know our customers. Our customers are typically people who today can afford to pay rent and they have an income. How can we help them own their own home where instead of them paying the rent to a landlord that harasses them all the time, they can use this rent to begin to pay their mortgages, and over time they own their own homes. These are also people who cannot afford to pay the lump sum for a house for 25 million, but they can afford to pay 20% down payment, and we finance the balance 80%. Those are not people that live in Maitama, Asokoro, or Wuse 2. That's not our market. We're very clear about that. We're also targeting people who are the upper echelon of the lower rank of the market, who are people who have employment, and we can verify their employment, their source of repayment, and we know that they can afford to service their mortgages. They will be given the mortgage provided they pay a down payment to acquire the homes. Social housing, it is not our mandate, because a lot of the social housing that is free right at the bottom of the pyramid, it's not an investment grade asset. The ministry can do that, and other government programs can focus on that. We have to deliver returns on investors' funds. That is why the fund is very clear. The fund is, government is subscribing like every other investor. The only thing is that we are giving is subordinated interest rates. And we will crowd in private sector investors' money, institutional investors who also expect return on their money. For us to do that, we need to create a product and invest in assets that will deliver returns to our investors. So any application, any program that does not deliver that, we will not be involved in it. There was a point about government support. We couldn't agree with you more. We couldn't agree with you more. We subscribe to the fact that government is a 30% shareholder in any business in Nigeria. How is that? Because when a business declares profit, gross profit, the first person that gets paid is government. 30% of that profit goes to government, even before the owners of the business get the money. So if government is a 30% shareholder in these businesses, government has a responsibility to create an enabling environment, make contributions so that these businesses succeed. The more of these businesses succeed, the more money comes to government. And that is why our view in MOFI is, how do we ensure that government can creatively provide interventions, liquidity, so that these businesses will succeed? Because each of these developers that declares a profit, government gets a part of that profit. The materials that are being bought for construction, government will get the VAT from there. Those companies, at the end of the year, when they declare their profit, government takes CIT from there. When those businesses employ people, government gets PIT. State government will get PIT from there. So it is in our common interest as government to create an enabling environment, provide some element of liquidity, to grow the pie and make sure that these businesses succeed, because we are the first beneficiary of it. The issue of mortgages is exactly why we set this up, because we recognize very clearly that there is no way that we can ensure our people get housing if we are expecting that the house that costs 25 million naira, they have to afford to pay that upfront. Many people can't, may never be able to do that. So we need to create a mortgage system that allows them, so long as they can pay 20% down payment, we finance the 80%. You don't have to wait until you're 60 before you afford a home. In your active period in service, you should be able to have a decent home with your family to live in, not until you save money and get it at 60. How many more years do you have to live? That is why we're creating the mortgage system. And that mortgage system cannot be at the same interest rate that a commercial loan, that a commercial bank will give, which is why in this case we are targeting a 12% interest rate. Our goal is ultimately to go to single digit. But as you can imagine, because we are blending the subordinated interest rate, the low interest rate from government funds, and the commercial interest from the private sector, we are landing at that point. But as the macroeconomic environment gets better, interest rates go down, we believe that that interest rate will go down even further, get to that single digit that we're all targeting. But we believe that 12% is a reasonable interest rate for now, given our current interest rate and our macroeconomic environment. Senator Alero, I couldn't agree with you more. You know, we know that housing is a very serious business. We know that. And that is why the first thing we did was that we did extensive consultation with all the stakeholders who are involved in this sector, because we can't afford to make the same mistakes they made. Neither can we afford to do what they're doing, because they are better at doing it. They've been doing it for years. We will work with them, including Federal Mortgage Bank. In fact, Federal Mortgage Bank is one of those institutions that, as shareholders, we are discussing with other shareholders to see how we can recapitalize it, so that it has enough resources to do what it was established to do. And we intend to work with them on that. On the National Housing Fund, again, we're working with the Ministry of Finance to make sure that we can mobilize as much resources that exist within the system to do what we have to do. Again, we're not building any houses. We are providing capital to enable those who are building the houses do more, do it faster. We do not want developers to build a house and sit on it for 2-3 years because they can't find buyers. Ideally, we want them to know that by the time the houses are done, the buyers are there to buy it because they have mortgages to buy the houses. Senator Abiru talked about, I know he stepped out, but for the benefit of the committee, he talked about the need for Nexim Bank. In fact, just before I came to this session, we had a meeting with Nexim Bank. We couldn't agree with you more. You cannot drive an export economy. You cannot drive an export economy if the institutions like a Nexim is not properly capitalized to run that. And that is on the list. It's one of the things that we plan to do, recapitalization of Nexim Bank, so that they have enough capital base to do the work that they're supposed to do. And then Senator Ned, you talked about the issue about land titles. In fact, there's a study that says that at least $300 billion is trapped in real estate assets, either due to lack of proper titles or incorrect titles, or titles that have problems. That is also an area that we're very cognizant of, and part of the criteria for us to even consider creating a risk asset on any of this is that we need to have irrefutable proof of the title of that property. But I would like to throw the challenge back to this committee, that it is absolutely important that we all join forces, especially from a legislative side, to do some land reforms. Because so long as we do not reform that, we would always be in problem. There's a book by a Peruvian that talks about the mystery of capital. And it says, why has capitalism succeeded in the West, but has failed everywhere else? And the contention with facts is the fact that in the West, they recognize the value of land as a way to release capital into the system. And what is it about it? It's the fact that every piece of property has irrefutable proof of ownership. And that is how you can use it to unlock capital for your business and other projects. So long as we continue to not pay attention to land reforms where every piece of property has irrefutable proof of ownership, we would always have these problems. And I'm throwing it back at you, distinguished members of this committee, that if there is anything that you should contribute in this discussion, it should be prioritizing legislative changes as far as titling of our land is concerned. Thank you very much.